after only a short time on the market, there is an attempt to reach new highs above all-time highs marked by a sharp double top. This follows range-bound trading over almost a year following the IPO. Naturally, these will be highly influential ranges in the future, especially the 40 and 34 levels, since they are the opening and closing prices on the very first day of trading. New highs are temporarily held to start 2015, but are quickly lost due to another double top with sharp downswings. The resulting downtrend has plenty of acceleration to push towards newer lows. The previous record low range around 31 is reused as a gap down fill level after the gap down in late October has recently been filled, and marks major resistance to the progressive recovery in 2016. Another case where a gap level is precise enough to be reused at the site of another gap, when a gap up serves as the catalyst back into the IPO range. Unsurprisingly, even the heavily bullish gap up candle ending July has its wicks form just around the old 39 and 34 levels to demonstrate their lasting impact. Like strong uptrends on other charts, the gap ups are not immediately filled. The gap up ranges hold downswings out of the gaps, following the two major gap ups. These features are commonly seen in large uptrends, and GRUB is no different here as it soon surges to new record highs. When GRUB undergoes a large-scale correction, a gap down exhausts bearish sentiment to unsurprisingly develop a swift and stable uptrend out of the IPO range. As would be expected, there is great progress with the uptrend, but a significant slowdown takes place upon filling in the gap down, centering around the 58.40 level. That was a very convenient round number near the closing price of the doji candle before the gap down opened. This break of the uptrend line converges with the break under the support offered by the 50 level to initiate a bearish reversal. At the same time, this completes a triple top. The triple top is neatly contained within a range mainly focused around the 58.40 and 50 boundaries. Price action is neatly contained within that approximate region, but the three downswings aren't perfectly aligned due to the first downswing forming slightly lower. However, it is acceptable since the bearish reversal candles share a common range close to 58.40. and still do align within the wider gap fill range defined by the candles in the weeks before the gap down opened. It is a strict triple top, but not perfect, with all three downswings completely leveled. That is the reality of how charts often form. They won't always have complete alignment, together with fully straight and narrow boundaries, like theoretical diagrams. This is another case where a formation straddles the border from a triple top to a flat top to a head and shoulders, due to the second downswing point being slightly higher. Again, this makes little difference in terms of the upper boundary, since the main focus of bearish reversal patterns would be breaching the lower boundary that concentrates at the 50 level. Almost the exact opposite scenario takes place when the clear downtrend line is surpassed along with the 40 boundary that marks the top of a bullish reversal range. Incidentally, this bullish reversal range can be considered the outline of a reverse head and shoulders, since the middle comprises of a lower downswing and the 40 area defines a horizontal neckline range. The left shoulder is not a clear upswing, but is part of the general outline of the pattern that sees the 34 level align with the small upswing in early April. The less ideal left side is due to higher volatility in March. That detracts from the pattern's otherwise valid reverse head and shoulders features. The prior uptrend line does still have some influence, as the new uptrend has several downswings form near it, on the same approximate trajectory. As trading activity moves sideways for a prolonged period, the distinct outline of a potential head and shoulders emerges, with the right shoulder slightly higher than the left, but still lower than the head. The 6750 level serves as the focal point of the neckline. It is highly valid since it was the site of a gap up fill in late 2018. The old levels under 6750 can provide excellent reference for support, in the case a head and shoulders reversal takes place.